Time now for Hot Picks. Our next guest is the manager of a global equity fund. He's got 3 stocks to share that are in that fund. It's the Mirova Global Sustainable Equity Fund. Joining me from Boston is Jens Peers, Chief Investment Officer and Portfolio Manager at Mirova U.S. Jens, thanks a lot for joining us. One stock you've got in your fund that you'll talk about with us is a stock very familiar to our viewers, one of our big rail stocks, Canadian Pacific, Kansas City. What do you like about CP?
Thanks, Paul. We just think it's a very well-run company, and specifically after the merger between Canadian Pacific and Kansas City Southern. We think there's huge potential driven by some cost synergies, but mainly revenue synergies as well. Keith Creel, CEO, we think is best in class in the industry. Big focus on precision railroading. He can implement that philosophy at Kansas City as well. I think he's going to do a great job. He's identified about $5 billion in revenue synergies, mainly coming from taking market share because of the combined network, but also from the truck to rail conversion. It's about $5 billion, and that compares to about $10 billion in revenues for Canadian Pacific and about $3.5 for Kansas City. So this is potentially a huge area of growth.
How long will it take CP to fully integrate that huge railroad south of the border?
Yeah, I think, we're going to see the first synergies this year already. Before you see the full effect, it's probably going to take about 3 years. But the big driver for them is not just the synergies, but it's really the only railroads now in that combination that really combines, Canada through the U.S. with Mexico as well. And there's a huge move in the world, towards nearshoring and friendshoring. We know there's some political, headwinds potentially around tariffs and all that, but it's really difficult to stop that trend as well. And again, the U.S. very dependent on both Canada and Mexico for their imports as well. We think they're going to be a big beneficiary here.
Okay, the next one is a clean energy company, NextEra, ticker symbol NEE in the U.S.
Exactly, yeah. So clean energy is not really the popular area today, but the debate really has shifted from energy transition. So there's a big focus on moving away from fossil fuels into climate solutions as well. But that debate has really shifted towards energy provisioning, making sure that people have access to energy as well. And that's specifically the case because of expected growth of energy demand driven by AI. AI currently is estimated to be about 3 to 4% of U.S. energy demand. That's expected to grow to about 11%, 11 to 13% by the end of the decade. So that's about 22% growth there as well. It's cheaper, it's quicker to develop wind and solar assets. NextEra is perfectly positioned, we believe, for that. Also trades at a 2%, approximately 2% dividend yield. So we think combined with all of that, it's quite attractive.
Okay, and finally, the last one, another very well-known stock, the stock that really kicked off in the minds of many investors, the obesity drug trend and market craze, Novo Nordisk. Now, that stock soared on the early returns and the early perceptions of its anti-diabetes, its diabetes treatment, which can also be used, of course, as an appetite suppressant for weight loss. But we've seen the stock, as we're seeing now on our screen since June, lose a lot of value. What's going on at Novo Nordisk, and why do you continue to like this stock?
Sure. Well, we've been a long-term fan of Novo Nordisk. It's been a long-term holding our portfolio, obviously an important contributor to performance as well. We like the long-term positioning in general. Like GLP-1 drugs are expected to grow enormously between now and the end of the decade. About 40 million people are expected to be on GLP-1 drugs at that stage as well. About 44% of that will be in the US. This is a market that is currently less than 10 billion in size and expected to grow to about over 100 billion in size by the end of the decade. There's only at this stage 2 credible players here. It's Eli Lilly and Novo Nordisk. Novo Nordisk obviously has a very well-established pipeline of drugs in both obesity and now weight loss as well. The pullback, we believe, gives a good valuation opportunity. Part of the pullback has been driven by some supply chain issues, which we believe will be solved in the next couple of quarters, and then the political events around the election here in the U.S. As well, with RFK coming in as the health department leader here as well, has been vocal against drugs for weight loss as well. About 90% of their users, however, are not really on any state-driven medical support. So we think that market is quite is well protected. A near-term catalyst could be now in December, but the potential approval in the phase 3 drug CagriSema, which is supposed to be an improved version in terms of efficiency and weight loss, could lead to 25% weight loss compared to about 15 for the current Wegovy option there as well. As with any phase 3 drug approval, this is both a risk and an opportunity. We have high confidence of approval for this one, so that could be a catalyst to push the stock higher as well.